Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for December 3rd, 2007. Well, today was Monday, the first day back after a nice relaxing weekend, I hope, for everyone. And the markets kind of were in a daze as well, it seemed, for much of the day. Volatility was at a minimum compared to what we've been seeing lately, and overall, the NASDAQ just kind of fluctuated most of the day, slightly on the negative side, until late in the day when we did see a little bit of a sell-off and a close at the lows. Now, there were a couple key factors going into today that were interesting to watch. Number one is Paulson was speaking, and number two was Chavez had the vote going for president for life in Venezuela. And surprisingly enough, oil was up ahead of that. Well, not surprisingly enough, obviously it was up ahead of that, assuming that he was going to win. And then as soon as they heard that he did not, oil did sell off hard. However, in just like catching shorts off guard in any situation, when all the shorts piled on the bandwagon there after he lost and oil was down about $1 or two early on in the day, well, just like any short squeeze or any market fooling the shorts, the amateur shorts does, oil reversed, closing higher by about $1 today. So very interesting in that realm, and that always happens. Whenever there's a big news story and you see a spike down in a commodity, the amateur shorts always get on too late. And I always say this because I never want anyone who's watching these videos to be caught off guard like that. Whenever something spikes down and you're not in right at the point before it happens, generally that's called chasing if you enter afterwards. And in 9 out of 10 times or so, those are the people that end up with a losing trade on their hands. So I strongly encourage to watch out for situations like that. Always look at something as, where was it yesterday or this morning or whenever, and am I paying up for it? Is that too much to pay? And the best way to think about this situation is to say to yourself, well, if I could have bought a gallon of milk yesterday at $1, am I going to go to the store and say, oh, yippee, let me buy it for $3 today? No, you're going to say, let me wait till it's on sale again for $1, and I'll go without. And the same thing needs to be applied for stocks, okay? Wait for it to be on sale, wait for all the technicals and fundamentals to line up, wait for it to be cheap, and then go for it. That way you're minimizing your risk, you have everything on your side, and you generally will make out in a better percentage there. Okay, now getting in right to the markets. Again, we talked about a pretty quiet market here, and that's exactly what we saw. We saw the NASDAQ trading down 24 points on the day, almost 1%. The Dow down about 57, or 0.5%, a little less than 0.5%, and the S&P down about 9 points, or 0.6%. So in general, there was no index that was down more than 1%. For most of the day, we hung around the flat line to slightly negative. The NASDAQ seemed to be in a range from down about 3 points to down about 10 to 12 points until we broke out towards the end of the day to the downside. And I'm going to show you here. You have the ES intraday chart here. This is the ES December contract, the E-minis. And you can say we were trading relatively higher here early on, and we had a sharp, well, not a sharp sell-off, but there was a sell-off. We bounced back up, sold again, and then consolidated here right into the close. And let me get my trend tools out so we can mark up the charts if we see fit. Now, on the NASDAQ, you have a little different situation here. You have this gentle move up, okay? And again, here's where we closed in the NASDAQ right here on Friday. So you had us gapping down just slightly. We filled the gap. We went a little higher. You have a nice reversal candle here. It's very small, but you can see the top tail and the close in the lower portions of the candle. That's usually signaling a possible reversal. You see that's exactly what we got to the downside. You got a nice amount of consecutive sells right down to that 200 moving average. The key here in this situation is it traded sideways to up, giving you a nice little flag pattern, or in spirit of a flag pattern as we like to call it. And then you got the breakdown, and then you got another consolidation period, and then the final sell-off into the close. Now, on the daily chart, the keys here are this. We knew the bounce was coming, as the video said over the last week. We kept on saying we're anticipating a bounce. We got the bounce. It was a nice bounce, no doubt about that. All right. Paulson talked today. It looks like they might freeze some of the ARMs, the ARMs, adjustable mortgage rates, and there might be some other big plans coming for helping the mortgage industry. But at this point, the market's factored it in. And that's what we saw today. Yeah, Paulson was out speaking. On Friday, Bernanke, we were running at first. We gapped up on Bernanke's statement. But you have to understand that once this happens, the market adjusts itself incredibly fast. So as soon as it happens, if you're not in, you're chasing. And I really want to concentrate on chasing today, because that's really should be one of the big things that, as all of those that are beginners or intermediate levels are, you always got to be careful not to chase. Okay, there are certain situations where you can anticipate, and that's when you're not chasing. But otherwise, if you're following the crowd, if a majority has already gotten in and the price is up or down depending on long or short, you're generally probably chasing, and it's better to stay on the sidelines. So again, on Friday we gapped up. Anyone that bought up there was chasing, and what did the markets do? They closed a lot lower than that gap up price initially. Today, what happened? Well, we saw that the Paulson speech come out. We actually went positive for a little while, but again, the markets factored it already in, and we fell back down. So again, here's the Nasdaq. We closed a little bit below the 20 moving average. So technically, we are below the 20 on the daily chart of the Nasdaq now, and the question has to be asked. Well, do we confirm this down move tomorrow, or do we bounce back above that 20? So that's what I will be looking for tomorrow, a confirmation move to the downside to establish, yes, we are below the 20, and yes, we do have a possibility of dropping down all the way down to this 200 again, which is in play. And after that 200, it's very possible we go down to the lows here, at which point we will possibly take them out. We will get to that point. There's no sense in talking about it yet. Really, you just want to concentrate on up to here and right down to this line right here. That's what's in play currently over the next day or two. Okay, so we look for a confirmation move down, possibly down to here, and then we'll see from there where we go. Again, if we don't get the confirmation and we get a close back above this 20 moving average, this yellow line right here, then we could be in a situation where we have another possible move higher, right up to this 50 moving average. That would be my next target on the stock, on the index, the NASDAQ index. Okay, looking at the ES chart here, you can see again we had a little down drop here after a push up, but the ES is still above this moving average here. So there's still a consolidation going on right here, where we're kind of figuring out, do we want to move up to the 50 moving average? Do we want to move back to the 20 and possibly break down to the downside? And we will know soon. I mean, this market has been very quiet the last 3 days comparatively. We were used to doing 40-point moves up and down intraday on the NASDAQ, and now all of a sudden we're in an area where we're doing 5 points up, 5 points down, and then maybe a little breakdown like we saw later today to drop another 10 points down or so forth. But for the most part, this market the volatility has just dissipated. And I gotta believe you got the Fed meeting the 11th. You got some issues coming up here. People are just kind of on pins and needles waiting to see which way. And then you'll see the markets react very soon off that data. Any new data we get, any Fed speak we get, any Paulson comments, any Goldman Sachs or any of these other firms that come out with any positive or negative news, you will see the market jump immediately and very quickly or drop very quickly as well. So be aware of that too. All right. Obviously, I want to point out, come join the chat room. Continuing to be a great learning experience. Some good day trades here and there. Always great scalps in this type of market. They're few and far between, but you definitely catchable. And that's the key here. We talk about them, and then all of a sudden, 5 minutes later, they go. Very, very catchable for everyone, in my opinion, and right out there for everyone to catch. In addition, you also have the swing trade alerts, the options alerts, and private consulting, as we always do. We definitely handle some private investors and private funds and so forth that are always available to be consulted with. All right, folks, just looking over a couple other things here. I just want to point out here, let's look at the SPI and the QQQ. First, the QQQs. Now, this is the intraday. I don't really care as much about the intraday. One thing I do want to point out here is that the Qs is really what I'm watching for. When this breaks down, that's what I really worry about. All right, this is the line for a breakdown in the Qs. We break that, we go to the 200 and possibly lower. Now, so far, when the rest of the market was breaking down, this was holding in a trend right here. Now, we bounced back above the 20, we hit the 50 right here, and now we are testing the 20 moving average right here again. Should this come back in this area, in this box that I'm just drawn here, this kind of rectangle, then you start to look for a move back to the lows and possibly a breakdown below. Should we get that breakdown, that's going to cause Google, Baidu, Research in Motion, Apple, and all the rest of those big cap hardcore tech stocks that have been very powerful lately to fall back down. And if they start to get hit, then the whole market, in my opinion, is going to get hit. All right, and that's what I knew the bounce was coming, because I knew in this chart we didn't break down, and that's how I figured that out and understood that until those big cap tech, which had been basically leading the NASDAQ higher and leading the whole market up, even while the financials were getting crushed, until those really fall down, I do have to believe that this market stays afloat. Okay? And again, just to point something out here, Research in Motion has been extremely weak here, and I want to point this out. Maybe it's a leading indicator. I don't know yet. Google was down today, $11.50, but Baidu was up. But Research in Motion and Apple were all down. So are these leading indicators? Are these setting the scenes for something? But you can see on the daily chart here, Research in Motion got pounded the last 2 days after having a beautiful bounce, leading the market up in a bounce. You had the bounce even here when the Nasdaq was still getting crushed, and now you're seeing a fall here when the Nasdaq hasn't really been getting crushed. So again, you have to watch these larger cap tech. I really do believe they are leading indicators here, and we'll continue to monitor them and the QQQQ for possible situational trades and possible market direction. The SPY hit its 200 moving average here. We broke above, but we did not confirm that move above, okay? In fact, today you gapped down and you actually closed below the 200. So now we're trading below the 200 here and above the 50 here, and we'll watch to see where that goes. All right, folks, other than that, always keep in mind these videos are just for entertainment purposes, and you should never take any information as reality. Always consult your financial advisor to make any financial decisions before doing anything. That's just common sense in my book. All right, folks, have a wonderful day. We'll talk to you again tomorrow. We should get some more interesting data where we close tomorrow in this market. Take care.